Hey, welcome back to Undercover Agent. I'm Celine Graham and I'm thrilled to see you again. Today we're talking about mortgage terms as well as real estate terms, banking terms, things that are a little bit confusing to someone who's new to the process. They're really not that complicated, but someone sometimes needs to go through it with you and kind of explain it. It makes you a lot more comfortable. So that's what I'm going to do today. So we're going to get right to it because I have a lot of terms to go through. So here we go. I think I'm going to start with a few terms that I can cross-reference some of our other episodes that we discussed. I think we'll start with PMI. PMI stands for Private Mortgage Insurance, and what that is a government-backed product in order to allow banks to make loans for under 20% down. If you are only putting down 3.5%, 5%, that puts the bank at a lot of risk. So the government steps in, they sell a buyer a product that will insure the mortgage until the bank can recoup enough of the funds that it lent out if the mortgage defaults. The next two terms are related to each other and they are mortgage terms. It's PITI or PI. Now I talked about these terms a little bit in our buying versus renting episode, but I didn't really go into it because I knew I was going to do this segment. Basically what a PITI payment is principal, interest, taxes, and insurance. It's all wrapped up into one, and that's what we call an escrowed payment. That means that your property taxes and your home insurance are paid by the bank. They take enough money in your monthly payment, your mortgage payment, to pay your property taxes every year and your homeowner's insurance. And that's a nice way to make sure that's taken care of. You're never going to have to worry that you didn't put aside the funds to pay your taxes. Now, PI payment is just principal and interest. Now, that's for someone who feels more comfortable with paying their taxes themselves. Some people like to put money aside every month in their own account. They feel like they're going to get interest on it. It's a little more freedom for them. To me, a few dollars a year interest on the money that you put into your own account isn't really worth the hassle. As an agent, I prefer especially my first-time buyers, to go with a principal, interest, taxes, and insurance, or a PITI payment. The next term I'm going to talk about is a CMA. And that stands for, it can stand for two things that mean the same thing. It can be a comparative market analysis or it can be a current market analysis. It depends on who you're talking to. But basically, that's what an agent does. It's the research that we do when we meet with someone who wants to sell their home. And that's how we arrive at the current market value of the home. We go back and check other homes that are very similar to the one that the seller has, and we make sure that we're comparing apples to apples. And that's how we arrive at a figure or a suggestion for listing your home. It's the same process that an appraiser goes through when they determine the value of your home as well. Now, you've heard agents talk about comps. Comps is short for comparables, comparable properties, and that's what I use in a CMA. I gather comps in order to evaluate a property. So if you hear an agent talking about a comp, they're just talking about a property that's sold in the past that's very similar to the one that you're discussing. I'm talking about a term called DTI, or debt to income, and that's a mortgage term. It's part of the qualification process that a lender goes through. And what they're doing is they're looking at the amount of debt that you have total versus the amount of income that you have every month. And they want those ratios to be in balance. If you have 70% of your income is debt, you're probably not going to qualify for a mortgage. And if only 10% of your income goes to your debt, then you're golden. So that's a term that a lender will use. Attorney review refers to the period right after your contract is accepted. Illinois requires that there is an attorney review period. You do have the right to waive it if you like. But basically it gives you, as a buyer or a seller, an opportunity to meet with your attorney, go through the contract, and make sure that all the terms are as you understand them and that it's favorable to you. Right of rescission. Now that's something we don't really hear in the purchase side of things. Right of rescission has to do with equity loans and lines of credit. It's when you're taking out a second position loan on your property, and a right of rescission in Illinois allows you to change your mind for a certain period of days after you sign on the loan. So because it is the home that you live in, it has to be a primary residency, the federal government says that you have a right to change your mind about that loan within a certain period of time. LTV, that's a term that we hear mortgage officers using, and that means loan to value. And what they're referring to is the amount of mortgage you're taking out versus the value of the home. So say you're buying that $200,000 home and you are putting $20,000 down. That's a 90% loan to value. You're taking 90% loan against the 100% value of the home. You have 10% equity. The lower the loan to value, the less risk there is for the bank or the mortgage company, and the more favorable terms you'll get. Earnest money. Okay, earnest money is what you give when you put an offer in on a property, and in law, you have to have consideration. They call it consideration when you make a real estate offer. Consideration can be $1, but it does have to be it has to be a dollar amount. It shows that you're serious. You're not just talking about it. You're going to step up to the plate. So that about wraps it up for today. We've gone over a lot of different terms that are used in the real estate and mortgage industry. Hopefully these will help make things a little clearer for you when you're speaking with your agent. You'll understand what they're saying to you. If you have other questions, feel free to make comments on any of our episodes, and I'll be happy to either respond through a message, or I can address it in a future episode. But I look forward to seeing you very soon. Don't forget to subscribe to Undercover Agent. I'm Celine Graham. See you next time.